I hope you would be doing well. Great. So, uh, so we were doing June 24 exam yesterday. So should we continue with the section B questions of that particular paper? If you're fine. Perfect. So let me start with the June 24 exam session. Not a start, in fact, the word is resume. So we are resuming the test. Mm, Still loading. Hmm. So we did the section A question yesterday, and today we are going to start the section B type questions of this particular paper. Okay. So let me start with this. So yeah, that sounds to be, that looks to be Insta. You are right. So let's quickly look into this. How can we uh, tackle this out, etc., etc. You should assume that today's date is 1st June 24. You should assume that is today's date is 1st June 24. Riza has requested advice in respect of after-tax amount of inheritance and reliefs available to reduce an inheritance tax liability. Okay. The reliefs available for her share of partnership trading loss, the reliefs available for her share of partnerships trading loss. Third, the relief available for interest payable on two loans, the relief available on interest payable on two loans. The following exhibit available on the left hand side of the screen provides information relevant to the question. Riza, the information should be used within the chosen response options. So, one of the biggest difference between section A and section B type question is in section A, there were four exhibits, a detailed long form scenario to consider. Whereas if I think about section B, a small scenario or comparatively, a small scenario, uh, requirements, if I look bit relevant because requirements were not relevant. This particular section was not relevant at all for section A, but for section B, it looks to me bit relevant. Let's start reading. Risa has recently inherited the residue of her aunt Fira estate. Left her previous employment on 30th September 23, became a partner in Piro and Company on 1st October 23. Okay. Has not made any disposals for capital gains tax purpose since the tax year 2021. Fira died on 8 Feb 24. had always been tax resident and domiciled in the UK, gave Risa's sister Perla an investment property on 1st March 20. This was Fira only lifetime gift. Pedia still owns the investment property which was valued at 210,000 on 1st May 2010 and at 182,000 on 8 Feb 2024. And 8 Feb 24 was her date of death, right? So if you look from the PET date at the date of death, the value of investment has declined. Value of investment has declined. Value of her investment has declined. Does it refers anything, any concept? This highlighted line, any concept, any point, any dot to join? Yes, please. The concept of fall in value relief when the PET CLT was made, its value was 210, and at the time, at the date of death, its value is 182, hence fall in value. Left the whole offer estate to Risa, except for a specific bequest of 90,000 cash to Perla. Uh, just imagine from this green highlighted line. Am I supposed to perform grossing up of estate calculation? The answer is no. There will be no grossing up of estate because grossing up of estate applies. Grossing up of estate applies uh, when one person is exempt legacy and second person is taxable person. And we are giving residual amount to exempt legacy. Here, if I look, one is sister, one is niece. Hence, there is no discussion of grossing up of estate. Okay, so I hope the grossing up point is clear. Feria assets owned at death on 8 Feb 24. House, which is Feria owned residence 370. 20,000 shares in Gato Limited and unquoted trading company. Personal chattels. Additional information. Fira had inherited the shares in Gato Limited from her husband Marco on his death on 21st November 22. Marco had acquired the shares on 2nd May 2014. Any point to think about shares? Marco has used all of his nil rate band for the inheritance tax purposes. This means there is like spouse nil rate band is used completely. Marco had acquired the shares on 2nd May 14. Any implications for this yellow highlighted? There is, by the way. Like, do think about, while I'm moving forward, do think about availability of BPR on the shares. Do think about availability of BPR on these shares, okay? Do think about. Pero and company prepare accounts to 31st March each year. Has a tax adjusted trading loss for the year ended 31st March 24. RISA share of this loss is 32,000. RISA share of this loss is 32,000. RISA other income. RISA earned an annual salary of 96,000 throughout the previous employment, which terminated on 30th September 23. She also received a bonus of 34,000 in each of the tax years 21-22 and 22-23. RISA loans. By the way, uh, from Payroll and company and RISA other income, any points to thought? While I read the question earlier and I'm reading these two lines, one thing continuously uh, appearing in my mind, which is uh, there was some discussion of loss and this Piro and company's partnership where RISA has a share of loss of 32. And if I look into other income element, I should be very clear what to do with the loss. So loss can be adjusted current year, carry back since she recently joined this partnership. So since she just joined this partnership, very good. Total income current year, carry back. Total income current year, carry back. Can we think about opening year as well? Can we think about opening year loss relief as well? Very good. So if I see the numbers, her salary is 96,000, means high rate, and she also received a bonus of 34. Also received means her income in that year would be 34 plus 96, somewhat 130 type-ish income amount. So needless to say, if you understand what will be the best,
नहीं sir, you're asking कि what would be the best for adjusting the loss?
yes. So I'm just, making my mind uh, while keeping the requirements in my mind. So I'm making a mind map. So I'm just thinking like what options I have current year, carry back, opening year loss relief. These options I have to adjust the loss. But if I think considering the numbers of her income, etc., then apparently it looks to me that the best option would be opening year loss relief because uh, what I can see is uh, that is the best option to adjust the loss. Right. I hope you understand how I am driving it. or concluding it? Perfect. Riza loans. On 6 April 24, Riza took out the following bank loans. A loan of 50,000 in order to provide additional capital to Piro and company. Interest payable in the tax year 24-25 will be 4,000. It means you have taken, Riza has taken out loan to invest in Piro and company. What this loan be called as? Like name of this loan would be, or the 4,000 interest would be referred as? This is interest expense, but more of this is a qualifying interest, because qualifying interest is interest uh, loan taken out to invest in partnership. Like he is investing, or he's not using the loan himself, he's investing into the partnership. That's why this loan in particular is referred as qualifying loan or qualifying interest. Okay. A loan of 80,000 to finance the acquisition of residential investment property. Finance the acquisition of residential investment property. Residential investment property. Interest payable in the tax year will be 5020. Residential property will generate taxable rental income of 24,000 in the tax year 24-25. So what to do with this? 5020 interest. Is it also qualifying interest? Then good. Then what? Is it qualifying interest? No. Then what to do with this interest? So it's a residential property mortgage loan interest. With residential property mortgage loan interest, what can we do? It can be, not it can be. It is, since it's residential property, so this interest expense is not allowed. So what we can do with this interest expense would be deducted from income tax liability at basic rate. Is this thing clear? No worries, that's fine. So I was just waiting for feedback. Great. So, why I am keep highlighting these points, because to give you an idea that you need to be vigilant, you need to be careful about uh, how to pick up the data or how to because if your this step goes, I would say, right, then uh, there will be very high probability to cover each and every aspect during the question. Explain the relief available in respect of lifetime gift by FIRA to Perla as a result of FIRA death. Explain the relief available. Please explain the relief available. So they are not asking me to calculate the relief available. They are asking me calculate the relief. Sorry, explain the relief. Second, A2. Calculate the amount of RISA inheritance from FIRA death estate after deducting any inheritance payable. You should include an explanation of the relief available to reduce the value of estate. State the options available to RISA to relieve her share of loss of PIRO for the year ended 31st March 24 on the assumption that she does not wish to carry forward any of this loss. State the options available. So state the options available means straight away you just need to list down the options. Current year, carry back, opening year loss relief. Extended current year, should I talk? Do I have any gains? So no need to talk about extended current year, okay? Explain which of the options are available uh, relieving the loss will result in the highest income tax savings for RISA. Explain means no need to calculate. Just explain. Yes, that's correct, Insra. So this point exactly expects this, that you just need to mention what options does she have to adjust the loss, i.e. for point number 3. So I'm talking about B1, right? Like she can, she should, she can adjust from current year total income, carry back total income. And since she started her business recently, joined the business recently, so she has the option of opening year loss relief as well, under which the loss can be adjusted up to 3 years against total income, etc., etc., etc. This would be my B1, B2, 5 marks. Explain which of the options for relieving the loss will result in highest income tax saving. So I will just say it in this way. If she adjusts in current year, what will be the implications? If she adjusts previous year, let's suppose high rate would be saved. If she go for opening year loss relief, then tax savings would be at this much percent. These type of stuff need to address. Okay. Um, by the way, B1, B2, is it doable at your end? Like a serious question. Like, do you really need help for this? I guess no, because we discussed it already in detail and a lot while reading the question.
No, sir. फर्स्ट जो है B1 में उनमें बस ऑप्शन हमें लिस्ट डाउन करने हैं और B2 में उनको कैलकुलेट करके बताना है कि हाईएस्ट इनकम टैक्स सेविंग किस में हो रही है, दैट्स इट ना?
For B1, yes, you are
फॉर
perfectly
बोथ,
right.
फॉर
For
बोथ।
B2, I just want to rephrase what you said. So for B2, what you are supposed to do is, let's suppose current year. For current year, Visa was high rate taxpayer, hence her tax saving would be at high rate. So 32,000 into high rate, whatever is the amount. For carry back, she was high rate. I'm just saying, like once I will be doing the question, so these numbers will be more clear to me. I'm just saying for carry back, it would be high rate. But for opening year loss relief, I do recall while reading the question, I noted she has income of 96,000 plus 34,000 of bonus. So income was 130,000. So she goes to additional rate. So my advice would be if she goes to opening year loss relief, if she goes for opening year loss relief, that would be the highest tax saving, right? So this is how I need to, and then whatever is best while my explanation or considering my explanation, calculate the amount of this tax saving. This means the highest one, not all. Yeah, again, so this is how we interpret the requirement. Calculate the amount of this tax saving, not everyone tax saving, only this one tax saving. Okay. Uh, Last, explain how income tax relief will be given for the interest payable on loans taken out by RISA on 6th April 24 and calculate the total amount of any income tax savings for the tax year 24-25 in respect of this relief. So let me talk into two parts. Can you explain? Can you explain the tax relief? It is for both. So RISA took out two loans. So we need to talk about two loans. One, the qualifying, second, the residential property one. Right? So we can discuss about how the relief will be given. So for loan one, it will be considered as qualifying loan deducted from net income to arrive at deducted from total income to arrive at net income. That would be my instance. Whereas if I think about second one, this is interest on residential property, which is not allowed expense while calculating the property income. Which is not allowed expense, rather it gives reliefs at basic rate from income tax liability. So this will be my instance for second one, right? This is initial. Second, calculate the amount of any income tax savings for the tax year 24-25 in respect of this relief. So what will be the amount of income tax savings for the tax year 24-25? So this requires quantification. For residential property, quantification is not an issue. Quantification is not an issue because income tax liability, mortgage loan multiplied by 20% would be my tax relief. Straight away, story end. Not an issue at all. But for qualifying loan interest, I need to see how much is deducted from, I need to see my status, like I'm basic rate, high rate, additional rate, and then my tax relief, my tax savings would be decided accordingly, right? So I hope I am pretty much clear on this. Perfect. So let's start writing it, solving it. So if I start watching the match, let's say, then your this particular session, it would be really difficult for me to keep it during the week. One. Second, historically, so I'm not a very much cricket match fan person. So historically, it happens is in one room there is match screening in the institute, and in another room we were conducting the class. So, and for these type of instances, what I normally used to do is in my earlier times, I do not record these classes. So if anyone missed it, missed it. So not a very much match fan person. That's the important thing. Relief available in respect of, so if you notice yesterday and today, my majority of the headings are from the requirement itself. So it's not like I reinvent the wheel for the headings. No, headings are mostly from the scenario itself, right? Explain the relief. They not name the relief. They are just asking explain the relief available. So the relief is
Sorry, sir, I supposed to ask. We will start the answer directly. Like we will put A heading and then start.
maybe I'm not very much clear. So you may be comparing from the yesterday question where we started from the heading memorandum to from subject, these type of stuff.
Yes, sir. I know there will be no memorandum briefing points in section B, but still we will just start the question like this.
True, true. So like the way question started, and again, they not ask me to prepare any particular format, I would say. So that's why I will directly start requirement A, A1, A2, A3. directly. And mm, that is the reason, one of the reason why section B do not have any marks for communication, uh, presentation and communication type of marks. Um, let's start fallen value relief. So fallen value relief. The investment property which had been given to Padla had fallen in value between the date of gift and the date of Pira's death. The fall in value would have been taken into account in calculating the tax payable by Padla following Pira's death. Fall in value relief, two important points. The tax is applied on the after relief amount, but NRB is covered by sorry. Yeah, so I was asking for fallen value relief, there were 2 points. Point number one, the tax is on after relief amount. There was one more point regarding fallen value relief. And the second point regarding fallen value relief was is ignored while calculating the value of gift for the purpose of calculating the remaining band available. I hope that's perfectly fine. Visa inheritance. Sorry. Amount of visa inheritance from FIRA death estate. The amount of visas inheritance from FIRA death estate after deducting any inheritance tax payable is from the inheritance. Do you feel any relief other than fall in value relief? And I highlighted this point, the yellow highlighted one, to give you a hint about a relief. And the hint about a relief was the business property relief. So if I were to discuss with you right now uh, on Gato Limited, BPR, would it be available? BPR, would it be available on this? The answer is yes. So for BPR, I need to see a couple of things. Is it quoted company, unquoted company? It is unquoted trading company. So from the company perspective, the condition is met. Now I just need to look for the holding period condition, which was 2 years. FIRA received the shares on 21st November 22, and she's like, she will, at that date is 8 Feb 24. So is it within, after 2 years? No. But since she received the shares from her husband and husband transferred the shares to FIRA, hence the combined holding should be considered, right? Not isolated FIRA holding to be considered, the combined holding to be considered. So these type of points I need to mention over here to discuss about the point which was You should include an explanation of the relief available to reduce the taxable value of the estate. So I will be covering this aspect, okay? BPR would be available at the rate of 100% on the Gato Limited shares. This is because the company is unquoted trading company, although FIRA did not personally hold the shares for 2 years prior to her death. She inherited them on the death of her husband, such that his period of ownership will also be included. Hence, the aggregate ownership period exceeds the now I'm going to, so first I said the context about BPR, and maybe that's a good piece of using both spreadsheet and Word. So on the spreadsheet I covered okay. So to calculate after tax proceeds, two steps. First, I need to find out FIRA death estate as at 8th Feb 2024, date of death. One is Shares in Gato Limited. BPR at the rate 100%. Then house, 530. Personal chattels by the amount. State, 530. NRB, 325. Used by lifetime gift. Taxable estate amount. On this taxable estate, directly the rate of tax. We already discussed at time of reading the question that there is no need of, of grossing up of estate, right? I'm done with part A. Uh, uh, so I hope you see the relevant section which you want to see on the spreadsheet. That's a good question, Said. Do we really need to specify add or less? So whether you specify, if you specify, it's good. If not specify, it's not a deduction. So that's totally up to you. So if you notice in some instances, I am putting add, some instances putting less, not necessarily everywhere. Options available. Share of trading loss. So I don't think so that it should be an issue, this part in particular. Reset 31st March 24. Risa trading loss of 32,000 respect of the tax year 23-24. Against Risa total income for 2023-24. Alternatively, because the loss has arisen in one of the in which Risa will be a partner. It can be relieved against her total income of the 3 years prior to the year of loss starting B1 clear? If yes, then let's move to the B2. B2. Options available. Sorry. Strategy for loss relief to maximize visas income tax savings. This is of 5 marks, okay? Relief against total income of in 23-24 visa total income will comprise of only her salary up to 30th September 2023 of 8,000 per month. So till 30th September. April, May, June, July, August, September. So we are talking about 6 months. $48,000. So 48,000 is her salary, is her income. If I deduct personal allowance of 12,570, she would be somewhat 35,000 something something. So I'm making a comment that she is a basic rate taxpayer in this tax year. I hope you agree with this. Such that claiming relief for loss of 32,000 will result in income tax savings at the rate of 20% with no waste of personal allowance. This is about 23, 24, right? The year of loss. In 22, 23, twenty-one, 22, and 22, 23. In 22, 23, in 22, 23, Risa total income was that sum up to in 22, 23, Risa total income was 130,000, right? The same would be her taxable income as her income is more than 125,140 and she titled for personal allowance. I hope you okay with this paragraph. I'm continuing for This one. Claiming relief for in this tax year, partly at the rate of 45% and partly at 40%. In addition, Visa net income would reduce to 98,000. Such that her full amount of personal allowance would now be available. Opening year loss relief. If alternatively, Visa carries the loss back to 2021, it will be relieved against her total income of that year of 96,000. She was a high rate taxpayer in that year, such that based on above discussion, carry back the loss and offset it in as this results So the best always approach is to work out from 'I really no need to input any kind of, uh, explanation now because all of the explanations have already been covered, right? Two five one four zero minus. So if you imagine, I'm getting effective tax savings at 56.47%. Is it done? Um, Perfect. So there were two loans. One was loan to provide capital to the partnership. Loan to acquire a residential property. 4 marks, 2 marks for each. Okay. Point number one. This is a qualifying loan for the purpose of income tax relief. Accordingly, the interest paid on this loan will be deducted from RISA total income tax for 24-25. Since RISA will be higher rate taxpayer in 24-25, this will result in loan to acquire residential property. Tax relief is available in respect of the interest on loan and will be deducted as accordingly. The total amount of tax saved in 2000 Hmm. Just a sec, I'll take just a minute or two more. I'm done. I'm moving forward. Next question, last question. You should assume that today's date is 1st June 24. ICAR has requested advice in respect of the total income tax payable on his overseas property income, the capital gains tax implications of two gifts to his daughter, and provision of rent-free living accommodation by his employer. At times, when I read the question with the students, not I'm not talking about ATX ones, I'm mainly talking about TX ones. Generally, when we read these type of statements, the provision of rent-free living accommodation, first thing, most of the cases, first thing, first comment, what I normally hear is, sir, provisions are not allowed. So in general, I agree with this statement, but is this statement suits or fits over here in this line? The answer is no. Why? Because the this provision is not that provision which is like uh, provision is a liability of uncertain time or amount. No, the word provision over here refers to the context of providing, right? So yeah, exactly. Okay. So I'm going to read the exhibit. Iker was born in the country of Tessia and is of Tessian domicile. So first thing, he's a Tessian domicile. Was tax resident in UK throughout the 19 tax years from was resident in Tessia in the three tax years 21, returned to UK on 6th April 24 to take up employment with Laudio Limited and became UK resident again from that date. Okay. Inherited house in Tessia on the death of his father in 2018. Started to rent out his house for 1 year commencing 6th April 24, showing his return to the UK. Following his return to the UK, fine. The tax system in Tessia. Income tax is charged on income in respect of property situated in Tessia at the rate of 25%. So there is a income tax concept in Tessia, which is at the rate of 25%, right? There is no capital gains tax in Tessia. Okay, so there is no capital gains tax in Tessia. There is no double tax treaty between the UK and Tessia. I hope you also understand this thing. Means if any double taxation, there will be straight away double tax relief we will be talking about. Income tax is charged at the rate of, at the moment, I really don't know, but you know, discussion perspective. If the person is basic rate taxpayer, then I'm very confident that the Tessia rate, UK tax rate would be lower, Tessia tax rate would be higher. But if the person I would be a higher rate or additional rate taxpayer, then in that situation, then in that situation, the Tessian tax would be lower and UK tax would be higher, right? I income in the tax year 24-25. Salary from his employment with Laudio Limited, 24,000 rental income from the property in Tessia. ICAR will not remit any of this property income to UK. ICAR, okay. If he not remit income to the UK, would there be any tax implications on his this one income? Yes, no, we need to think about this. Okay. Because he not remitted the income. Remittance basis available to him, not available to him. All these type of discussions, conversations. Right? Gift of two paintings, ICAR. ICAR purchased two paintings in 2015, both of which are situated in UK. Gave painting one to his daughter, Arama, on 1st January 24, when he was still in Tessia. Will give painting 2 to Arama either on 1st April 25 or 1st May 25. Painting 1 give rise to chargeable gain of 33,000. Painting 2 will generate a capital loss of 17,000. ICAR has no plan to make any further gifts to Arama. He make disposals each year to use his annual exempt amount, CGT annual exempt amount. Hmm, okay. ICAR income in the tax year 25-26. ICAR will be a high rate taxpayer and will have no overseas income. Laudio Limited will also provide beneficial living accommodation for ICAR. Provision of beneficial accommodation will provide ICAR with an unfurnished house rent-free from 6th April 25. The annual value of this house is 6,100. Purchase this house in June 2020 for 426. Market value at 6th April 2025 will be 455,000. The discussion, conversation of expensive accommodation, and I hope you understand. In expensive accommodation, uh, do we have to consider cost or should we consider market value? We'll pay 68,000 for the construction of conservatory in the house in May 25. Will not contribute to any of the running cost of this house. This house will not constitute job-related accommodation for ICAR. ICAR cost savings on 6 April 25, when his rental agreement ends, ICAR will move out of his current living accommodation and into the house provided by Laudio Limited. ICAR regularly monthly outgoings in the tax year 25-26 in respect of his current accommodation would have been rent, running cost. ICAR estimates that equivalent running cost of house to be provided by Laudio Limited will be 5% higher than those of his current accommodation. Okay. Calculate the amount of UK income tax ICAR would have to pay in respect of his overseas property income for the tax year 24-25 on the assumption that it will be taxed on a rising basis. Explain whether or not ICAR is eligible for his overseas property income to be taxed on remittance basis. Okay, so first overseas discussion, need to discuss income amount of income tax if a rising basis, and then a discussion whether remittance basis is available or not. In respect of gift of paintings, explain by reference to ICAR resident status why the disposal of painting one will be subject to UK capital gains tax. Why? Because the property, the asset was UK resident. Sorry, the asset was UK based. Will consider about his residency aspects. Explain why, whether it would be preferable for ICAT to give painting on 1st April 25 or 1st May 25 in order to minimize his liability to CGT. Painting 2 was incurring a loss of 17,000. So it's more of like when realizing this loss is beneficial in 23, sorry, in 24-25 or in 25-26, because if you made a gift on 1st April 25, this would be 24-25. Calculate the amount additional disposable income available as a result of being provided with living accommodation. You should include an explanation of your treatment of expenditure on the construction of conservatory. Okay. Should we start? Perfect. UK income tax in respect of overseas property income. And this is more of about if I read the verb calculate. So here I'm mainly supposed to calculate, okay? The amount of UK income tax ICAR would have to pay in respect of his overseas property income UK employment income 45,000 salary mm, Taxation property income Taxable income. $37,700. Am I supposed to calculate UK income tax now? I'm only supposed to calculate his, if I read the requirement again, amount of UK tax would have to pay in respect of his overseas property income. I'm not talking about overall tax, overseas property income. UK income tax excluding Taxation income. Hence, UK income tax on Taxation property is Taxation tax. It would be additional UK tax on Um, I'm done with this part. Availability of yes, please, I'm waiting. Sorry. Perfect. Availability of remittance basis. So remittance basis is available if a person is UK resident but not domiciled, right? Actual or deemed, whatever, but not UK domiciled. That's the principal statement. So if I think with respect to ICAR, remittance basis is available to individuals who are resident, are UK resident, but not domiciled or deemed domiciled in the UK. So that's a general statement. Now I'm linking to ICAR context whether it would be available or not. ICAR will be tax resident in UK throughout 24-25. But he is not, however, he will be deemed UK domiciled in this tax year due to having been resident in the UK for 15 out of So I said he is not resident, but he is not domiciled, but he is deemed domiciled. So he is resident and deemed domiciled. Therefore, ICAR would not be eligible to claim the remittance basis. Explain by reference to ICAR tax resident status why disposal will be subject to UK capital gains tax. With respect to residence status, with respect to residence status, why disposal will be subject to UK capital gains tax? I need to look for a couple of items in this. Gift of two paintings. ICAR purchased two paintings in 2015, both were of which were situated in UK. It means painting is a UK asset. Uh, and he was in the UK till 2021. So he purchased the painting while he was in UK. Gave painting to his daughter on 1st January 24 when he was still in Tessia. Now, uh, everyone, for capital gains, the first thing to check is the residency status, whether the person is resident or not. So if I think about January 24 means fiscal year 23-24, ICAR was not UK resident, right? Second thing to check, is he temporary non-resident? If the answer is yes, he is as good as resident. So if the answer is yes, he is temporary non-resident, then we already discussed that he is deemed domiciled, then the gains will be due on a rising basis. Okay. But since he is not in UK, so CGT will be due in the tax year in which come, he will come to the UK. Okay. Directional discussion clear? If yes, then writing is easy, but first direction discussion should be clear. Is the directional discussion clear? So it means like in that country, Tessia, there is no CGT. Like if you ask in Pakistan, is there a concept of capital gains? Yes, there is a concept of capital gains in Pakistan. In this way, in Tessia, there is uh, maybe you're trying to write no CGT charge. So no CGT charge in Tessia. So like, you know, uh, property income, Tessian property income. Was there any income tax on that property in Tessia? Yes, 25%. In the similar way, was there any capital gains tax in Tessia? No, Tessia is a country, according to this, where there is no capital gains tax. Is it okay? Perfect. Painting one. Painting one. First, general statement. general rule regulations, then we'll link with the ICAR situation. Individuals who are tax resident in UK are liable to capital gains tax in respect of disposal of although ICAR was not resident in UK in the tax year 2021, 22 to 23, 24. ICAR will be treated as temporary non-resident in the UK for CGT purposes. Because he was UK resident for at least 4 out of 7 tax years he left the UK and he was non-UK resident for no more than 5 years. Accordingly, is the painting which he gifted to Arama while he was in Tessia was owned by him when he left the UK. It will be subject to GGT in 24-25. Painting one. Any confusion, clarification required in the discussion? Perfect. So I'm heading towards painting 2. So painting 2 talks about whether gifting the painting, on 1st uh, April is beneficial or 1st May is beneficial from a tax perspective. So this is what I need to discuss, right? And for painting 2, importantly, there is a capital loss of 17,000. So one thing we are clear that painting is still in the scope of UK tax. ICAR and Arama are connected persons for CGT purposes. Accordingly, the loss arising on the gift of painting 2 can only be relieved against gains arising other disposals to Arama in the same or future tax years. If ICAR gives this painting to Arama on 1st April 2025, the loss can be offset against gains arising on property 1. And which is arising on however, if the gift is not made until 1st May 2025, the loss will arise in tax year 2025-26, such that ICAR will have a CGT liability in respect of full amount of gain on painting one and an unrelieved loss on painting two, which may never be relieved if ICAR makes no dispose new future gifts to Arama. Therefore, it is preferable for ICAR to gift painting two on first April 25. You're done with second part painting, like painting two or any confusion. Hi, Musa. Sure. Uh, Additional disposable income. Calculate the additional disposable income available to ICAR for the tax year 25-26 as a result of being provided with living accommodation by Lotio Limited. You should include an explanation of your treatment of the expenditure on the construction of conservatory. So two parts. One, calculation of additional disposable income and an explanation of treatment of expenditure on the construction of conservatory. Right? Uh, Additional disposable income available ICAR for the tax year 25, 26. Refer working to am I right? It is working to additional disposable income. So if I think about this, I need to pay income tax, right? There will be some rental savings. Will be some running cost savings. Let's see how much additional income would I get if I live over here in the uh, Laudio Limited provided house and let out my own accommodation rather than, sorry, living in the rented premises. Okay. So, um, it is scared, seriously. So if I were to calculate accommodation benefit, annual value, expensive accommodation, official rate of interest, 2.25. Thanks, Musa. So, expensive accommodation amount 7,897 or make it 98. Uh, will not contribute running cost of this house. The house will not constitute conservatory, a separate discussion. As a result, total benefits additional tax liability. Then I'm looking for cost savings. On 6th April, when his rental agreement ends, ICAR will move out of his current living accommodation and into the house provided by Laudio Limited. Okay. So it means there will be ICAR regular monthly outgoings in the tax year 25 in respect of accommodation would have been rent. So I'm like, his rent would be saved. How much rent saved? 1100 multiplied by 12 because it is monthly. So I'm like, if he moved to this property, ICAR estimates that the equivalent running cost of the house to be provided by will be 5% higher than those of his current accommodation. ICAR estimates that the equivalent running cost of the house to be provided by Laudio Limited will be 5% higher than those of the house after rent saved. Additional running cost. So here he as an ICAR needs to bear the running cost. So if you look over here, provision of beneficial accommodation, Laudio Limited will not contribute to any of the running cost of the house. Laudio Limited will not bear the running cost of the house. It means bearing running cost of the house. It means bearing running cost of the house resides with ICAR, right? ICAR will be bearing the running cost and he will be bearing the conservatory cost where we need to have a discussion, right? And if I look into this line, ICAR estimates that equivalent running cost of the house to be provided by Laudio Limited will be 5% higher than those of his current accommodation. So if he moved to uh, Laudio Limited provided house, then if he moved to Laudio Limited provided house, then his running cost would be 700 multiplied by 12 multiplied by 5%. And why? Because it is 5% higher. So I'm calculating on incremental basis. Yeah, Musa, so that's one of, so I'm again talking about incremental. So if lived in the previous rented house, then 700 multiplied by 12, which is like 8400, has to be borne by me, means ICAR. But if he is living in Laudia Limited provided house, then the maintenance or the running cost is 5% higher. So if he move to Laudia Limited provided house, his previous rent expense would be saved. but he need to incur additional running cost. He need to incur additional tax liability. Is this calculation and conversation? Both things. Clear? Thanks, Musa. Insra, are you clear on the calculation or is there any confusion? Perfect. Tax treatment of the expenditure on conservatory. So I picked up cost, a question. I picked up cost while calculating expensive accommodation benefit. Did I consider the cost of conservatory, i.e. improvements? Did I include? If yes, it's great. If no, then probably need to think why not. Any thought? Maybe let me rephrase. Mm, Laudia Limited is paying for the construction of conservatory in the house in May 2025, which cost 68,000. Is it a capital expenditure? The answer is yes, it's a capital expenditure. My question is, did I consider this 68,000 in the calculation of expensive accommodation? Very good, Musa. So simply you concluded that it is something which is constructed this year. So for improvements, the general principle is if improvement made in current year, then it will be reflected if from next year or right. So for the purpose of calculating the expensive accommodation benefit. The original cost of property is increased by the cost of any capital improvement prior to the accordingly the improvement expenditure of 68,000 in relation to the construction of conservatory, which will be incurred in May 2025, will be ignored right? Thanks for the feedback, Musa. Instra, anything from your side? So if I ask you a question, which was more easy, the question one or question two? Sorry, like section B, the questions which we did today. So from the word count, I can tell the question two, which we just did, ICAR one, is smaller as compared to the previous one. So as an independent, if I would be independent, then I would give a comment that question two, ICAR, is bit technical as compared to previous one. Uh, bit technical, but the previous one is more of lengthy and less technical. So this is how I see these questions. So perfect. So I'm done with the agenda for today. Um, if anyone wants to have discussion on any particular thing, please do let me know. So thanks for raising. So for next Saturday and next Sunday, I scheduled it for 8 p.m. Pakistan time. So I'm not sure what will be uh, your fast breaking time. If you can share, so I can consider. I will for sure consider that. Yeah, 8 to 11 Pakistan time. Would it work for you? Okay. Mm, So do share your exact avatar timings for next Saturday, Sunday would be with me. Uh, I will for sure take care uh, of this. So it's 2 hours or 1 hour to be precise. Isn't it 1 hour time gap, time difference? Musa, the answer is yes. The recordings will be available at your portal. So nothing to worry around on the portal front. Okay, 2 hours of time gap. So instead, do share with me the exact time. So I'll let's say keep a cushion or buffer of uh, 30 to 60 minutes. Okay. Okay. So it's 5:45 to be precise. Mean six. I'll keep it 9 to 12 if it's fine with you. Like Pakistan time 9 to 12, it would be your 7. So you would have somewhat 1 hour, 15 minutes time gap. Would that work? Perfect. Thanks for raising. I'll just drop me this line as well in the group uh, so that it keep in my mind because I communicated the time of 8 to the admin guys. So I need to request them to reschedule it. Okay. Musa recordings will be available. So probably by tomorrow afternoon, the recordings will be available at your portal. And I will upload uh, the PDFs of today and yesterday paper on your drive. Okay, so thank you very much. Take care. Have a good day ahead. Flag item. Uh, and if anyone want to have discussion on any particular thing, can discuss. Otherwise, good to end from my side. You guys want to ask? I was just trying to close the window. I don't know why it is continuously. Sorry, Insta, I'm just reading your message. Uh, Insta, on your point, like I maybe already said couple of times to others, the same message to you. At the moment, it will be more learning with observation, learning via practice rather than direct hardcore learning. So what I will advise to you is focus more on the practice. The more you practice, the more you will learn how the things can be examined, the more memory retention would be. Uh, at the moment, solving the questions only is not as such fruitful as it used to be in earlier times. So study with practice is important now. And if you ask me, sir, I have one day, I have two options. I can either practice one question, or I can either practice one complete paper, or either uh, make a complete revision. What should I do? So I would say first give, let's say, half time to revision, and let's say 40% of the time to revision, and more 60% of the time to practice. That would be my message to you then. Thanks once again. Take care. Try to practice as much as you can, uh, both of you, and to everyone. Inshallah, ATX will be yours. Inshallah. Take care. Hafiz.